Hey there, cannabis traders and investors. We're going to look at charts and technical analysis for the sector as we are looking for a bottom. We've done this a handful of times over the last 6 months, and every time the bulls have failed. But that does not mean we are giving up on the sector. There will be significant opportunity here. I will look to make significant profit in this sector, but we are patiently waiting for the signals that show us the shift is taking place. So we're going to look at Canadian names, US names, and some psychedelic names. Let's check it out. So just a quick introduction for those who may not know us. We've been covering the sector for about 7 years at this point. I've been trading cannabis stocks for about 11 years, going back to the penny stock days, and I am a trader. I don't care about fundamentals. Yes, I am aware of fundamentals. I'm certainly paying more attention to the bigger picture political environment and headlines and states voting and things like that. I care more about that than individual names. I am a trader. I am not married to any of these stocks. I have attempted some positions over the last 6 months. I've had some small wins, some break-even stop outs, some small losses. In the end, constantly going back to all cash to patiently wait for bulls to prove to me that it is time to hold a position for more than just a few days or a week or two. So I am patiently waiting for the opportunity, essentially, is what it boils down to. And so again, I know a lot of people care about the fundamentals and they have positions, but from where I stand, that is my mindset. I don't care if this sector takes another 3 months to find a bottom. Whenever it finds a bottom, I am going to be interested in the sector. So I am interested in the sector leading up into the November votes because I've seen this cycle over the last decade many times where we have, generally speaking, a lull in the summer. And obviously the broader market has a big impact. We're going to look at the broader market and it is definitely having a big impact. But a lull in the summer, and then when it is a voting year, we then look for the fall into November to pick up as we see the bulls front run that voting season a bit, because we know that with that voting season, some states will legalize recreational, some states will legalize medical, and we will get headlines and media coverage, and it'll be on CNBC, and they'll be talking about the sector. So we've seen this cycle enough that that is what we're going to anticipate. In an ideal world, if you've been watching these videos, you can go back. I haven't been making a lot recently, and when action picks up in the sector for the bulls, we'll be making these videos a lot more. But constantly covering it in our Chart Guys community and every day keeping an eye on it. But in terms of trading it and actively being in positions, a lot less frequently. So in the past videos, however many months ago, one thing that I said was, and I certainly couldn't predict, the amount of downside that we would see, but I said, we are weak when the broader market is at all-time highs. If we see any broader market weakness, we're going to see continued downward pressure on the sector. And what I want to see, being all cash, of course, and not being in any long positions, I want to see broader market weakness lead to this sector getting absolutely crushed. And then I will look for the broader market to find a bottom, to be looking for this sector to find a cycle bottom. And what do I mean by a cycle? I mean, this sector has gone through more cycles than I've ever seen in terms of the magnitude, where back in 2013, the penny stocks were going up 1,000+%. Then they pull back 90+%. Then you get the Canadian MJ run of hundreds of percent. Then they pull back 80+%. And this has happened probably 3 or 4 different distinct times, even into the CVID drop. I can't say that word, YouTube doesn't like it, but we saw that drop and we were weak. The sector was weak. The broader market saw weakness on the CVID dump, and that marked the bottom. When the broader market found its CVID bottom, the sector found its bottom and saw hundreds of percent to the upside. So I am looking for a cycle bottom and hundreds of percent to the upside. I just don't know when it's going to happen. I'm not trying to predict when it's going to happen. I'm reacting. I'm reacting to what the price action is showing us, and how I do that, I'll talk about in this video, and let's get into it. So again, I am not paying nearly as much attention in terms of SAFE and all this. I'm just so sick of following the House of Representatives and the Senate and all that. It'll happen eventually, but I'm looking towards November is where I'm at, because I am very confident in states passing things in November. I am not confident in SAFE being passed in the short term. So the NASDAQ in the broader market is extremely important to us. We know that when there is a fear environment, everything links up in terms of correlation. And it doesn't matter what the fundamentals are. It doesn't matter what the market cap is. Just like on the way to the upside, we know euphoria. Remember what CGC's market cap used to be? Market cap does not matter in euphoria. Market cap does not matter in fear, which is why I personally don't like trading on fundamentals, because things can get so out of whack based on what the broader market or the emotional environment is doing. But we have a new fresh low on Friday in the S&P 500 and the NASDAQ, and we then saw a notable bounce into the end of the day due to OPEX. And that is a bunch of, I think, trillions and trillions of dollars of options expiring here into the end of May. So that was going on Friday, and that was the reason for the big bounce into the end of the day. Big picture, we have a ton of work to do for the bulls to shift momentum. We need an hourly trend change to the bulls, then we zoom out. We need a daily trend change to the bulls. But whenever we get a bear break that lacks follow through, I look for a falling wedge pattern, and a falling wedge shows us bear exhaustion. So I'm not confident this is a falling wedge, but as soon as I see that bear break with no follow through, I draw these lines as a visual guide, and it's something that I'm going to be keeping an eye on into this coming week, knowing that if we look at SPY can bounce a good bit from here, and we can bounce 4% to start this coming week and still be in a daily downtrend, because anything under 408.57 is just a daily lower high. If you do not understand technical analysis or you're a beginner, our YouTube channel here has a ton of intro videos, a free intro course, and all that to make sure we're speaking the same language. So I encourage you to get on top of that, because technical analysis is what has allowed me to profit in the cannabis sector multiple cycles, and most importantly, not give my gains back. I'm back to all cash before the bear market starts, and it's the charts that allow me to do that. I'm not nailing tops and bottoms, but I'm certainly doing so enough to be doing well in the sector. So I suggest learning technical analysis, at least a small amount, to complement fundamentals if that is your go-to. So that's what we're looking for in the bigger picture for the broader market. It's important to note that when I'm looking at the cannabis sector, I'm looking more so at the Russell 2000 than I am the S&P 500, because the Russell is made up of more growth-focused names that have more higher risk and higher reward. So these names outperform in a euphoric bull market, and they underperform in a fear environment. And so looking at IWM, there's a little bit of a difference. And the growth names that I lump together with cannabis, it's IWM. As we can see, we didn't hit a fresh low on Friday. So that stands out to me. It's potentially a higher low forming, trying to set up the daily trend change. So I look at IWM, and along in that grouping, I look at names like ARK. We know ARK has been weak just as much as cannabis has been, with the size of its pullback and the length of time that we've been pulling back. This is the monthly perspective, where every candle is 1 month. And again, just absolutely smashed. And if we're looking at comparison percentage-wise, ARKK here is down 77.8%, whereas MSOS is down something similar. So we'll say 78% versus 76%. So again, they're extremely similar. And that's why I look at these names to have correlation. So ARK is one, the biotech sector is one, same deal. The massive pullback, very reminiscent, 65% drop, bears in complete control. So ARK, XBI, IWM, that's about it. That's what I'm looking for as a grouping for similarities. And crypto kind of falls into that grouping, just because obviously it's higher risk and higher reward. And there have been times where crypto has been doing similar things to the sector, not so much recently, but anyways, that's how I organize things in my brain. So now let's get into Canadian MJ. And again, just a brief overview here. We know Canadian MJ names are traded on higher listed exchanges. And that means there's a lot more dollar volume. There's a lot more liquidity. There's a lot more day trading opportunity. And so when we see shifts in sentiment and bounces, these names outperform USMJ. And again, it has nothing to do with fundamentals, because the people like myself that are trading these moves don't care about the fundamentals. They care about what is the percentage gain that I can see over the next few days or few weeks in this name. And if that opportunity is more significant because a name is listed on the NASDAQ, then I'm going to trade that name on the NASDAQ, even if it is fundamentally inferior to a name trading on the OTC. So again, that is the mindset of the market. And like it or hate it, that is the way that the market environment is currently trading. So that will shift eventually, but until it does, we look for Canadian MJ names to react first, and USMJ names to generally act as laggards to Canadian MJ strength. And that has provided trading opportunity multiple times. In the trading environment, in the broader market, as someone who trades full-time every day, you can see the constant correlation and the constant speed of these automated trading systems. And they don't exist nearly as significantly on the OTC. So we see, if CGC shoots up on CGC related news, ACB, CRON, TLRY, they're all shooting up with it. Maybe not as much, but they're reacting at the same time. And there's algos and automated trading systems that are reacting to the price action. They're reacting to the volume that is coming in, and it's almost instantaneous. But then you look at the USMJ names, and there have been multiple times where I've seen a big bull move in Canadian MJ names, and I've been able to buy USMJ names as a laggard. And granted, the moves are not nearly as explosive, but if CGC goes up 6%, and I say, oh man, well, I missed that move, and then I jump in MSOS, which goes up 2.5%, it's still profit and it's still opportunity. So that's how I've been viewing the sectors. And again, it's an environment and a correlation and a relationship that will continue to change, throughout time, but that is where we stand right now. All that being said, Friday was a little bit different because we now have some USMJ names leading a little bit more than Canadian MJ names. And just looking at CGC, big red day on Friday, and you look at MSOS, big green day on Friday. So this relationship between the two happens less frequently. So we're going to dive into now the specifics of what the bulls have to do to prove to us that a shift is underway. So as we know, a trend change is higher lows and higher highs. And that is the bare minimum of what we need to see. And you've been watching these videos, you've heard me say it 150 times, can bulls confirm the trend change? Even this move here, very massive move, 50% plus back in March, feels like forever ago, 50% plus, but no real convincing daily trend change. What I want to see on a trend change is clear pivots. You see a bull move, you establish support, and you see continuation because that shows bulls buying the dip. That shows continued pressure being put on shorts. Shorts have been trained to short every bounce in this sector, and they keep winning, and they keep being rewarded for that play. And even the last few days, they keep being rewarded. Look at CGC. High of Thursday is $6. High of Friday rejects from resistance by 5 pennies and then drops massively. So you can risk 1 to 2% to potentially be rewarded with 4 to 5 to 6%. And as long as that opportunity presents itself, the bears will keep taking advantage of it until there is a notable shift. And so what has to happen is bulls must hold 482 and break 621 to confirm the trend change. This is an inverse head and shoulders potential pattern, and all an inverse head and shoulders is a downtrend changing to a higher low and higher high. Lower high, lower low, downtrend, higher low, higher high, if it can confirm. Now, because we're in such a prolonged downtrend, every time we change the trend on one time frame, we zoom out and scout a lower high on the next time frame. So for example, looking at MSOS, we just changed the daily trend. So we held support, a base of support at the all-time lows, and we broke the daily lower high of 1456. That being said, now we zoom out and we know a weekly lower high is the most likely scenario because anything under 2150, way far away, anything under that level is a weekly lower high. We've been rejecting from weekly EMA 12 resistance at this point very clearly for over 5 months. Every bounce attempt is rejecting from that level. So we'll be keeping an eye on that level as it comes into play over the next couple of weeks. My point is, it takes a really long time to change the daily trend, then change the weekly trend, then change the monthly trend. And it's going to be the same thing. The first time we change the weekly trend, it's going to require a bounce that's big enough to create space for a higher low, to then see a confirmation. That's going to take months to play out. And then once it does, guess what we're going to do? We're going to zoom out to the monthly chart, and we're just going to be looking for a monthly lower high to be the result of that bounce. And then we have to change the monthly trend, and that's going to take 4 months plus to play out. So it's one time frame at a time, and unless there's a significant news catalyst that just leads to a short squeeze and money pouring into the sector, it's going to take time to play out. One time frame at a time. So CGC, if we do not break 621, the bears keep absolute complete control. And again, I know most people watching this video are viewing the sector through bull lenses. They want the sector to go up. They believe in the fundamentals, whatever the reason, some of you have been viewing it bearish and hedging, and props to you. But my point is, we want to be looking at it from the other perspective. So if I am a bear, I know that if 621 doesn't break, I have no reason to cover positions because I'm extremely comfortable in the daily downtrend. So cannot stress enough the ability to trade in both directions, because now that I have an MSOS position, which I'll talk about in just a moment, the position that I entered, I'm going to be looking to trade CGC bearish to hedge that position. So if I can, let's just say we open on Monday, I don't think we will, but if we were to open right near the high of Friday, I short, I put my stop over the high of Friday. If it's a red day, I profit on that position. Even though my MSOS swing is dropping, my account value goes up. So that's how I approach the sector. If I have a bull position, I put my bear glasses on and I look for bear positions to offset that in case there's weakness. So long story short, daily trend changes needed for the bulls. Anything less than that and nothing changes. And that's the case for most individual names. So now that we've got that backdrop of knowing where we stand, we can go through these other names fairly quickly. Cron is a lead bull in Canadian MJ names. Why? Because it's bullish earnings reaction. It was kind of a little kickstart, and at this point, we are significantly off the lows. And that's the reason bulls keep having interest here. You look big picture, and you look at this bounce and say, well, that bounce is nothing. That bounce is doing nothing big picture. Who cares? But you zoom in, and that is a 27% bounce. So even these weak bounces are notable, and that's why, in my opinion, when we do find a bottom, it's going to be real easy to go 100% plus off these lows once the shift is on. So we are in a daily uptrend for Cron, so it's different than CGC. The weekly bounce is underway because we're in a daily uptrend, but anything under 431 is just a weekly lower high. So if we don't break 431, it's a weekly lower high. We then need to confirm the weekly trend change, which is going to take potentially weeks to play out. But our bounce is more developed in Cron than most Canadian MJ names. TLRY is also trying this inverse head and shoulders attempt, where we got a left shoulder with 540 resistance. We dumped, we saw a big old bounce, we failed 540, and now we're trying to set the daily high or low. So again, trying to shift from a downtrend to an uptrend. And again, you go back here, massive bounce, we never changed the daily trend. It's very easy to slow bleed and give back all those gains if you do not establish support levels and see that continuation. Essentially what is happening here is a runaway bull move that forces shorts to cover, and it's just this perpetual move of bulls buying and shorts covering until there's nobody left to buy long, shorts have all covered, and now what? We just fade back. The higher low and higher high is so important because it shows you sustained buying, which we have not seen in this sector in a very long time. So the bulls must hold 389 and break 517 for a shift to take place. The way that I trade this kind of move is I look for a setup that is clear enough for me to say, okay, that is our daily high or low, and that's going to be my stop level. So let's just go over an example trade here. Let's say we open and see a little bull move on Monday. We fail the high of Friday, so it's just an hourly lower high. We hold the low of Friday. We confirm an hourly trend change. That's enough for me to say, okay, that means 455 has to be our daily high or low, or bulls aren't going anywhere. So I make a trade, and 455 is my stop if I want to be an aggressive bull. So if 455 is my stop, I then have to see the daily trend change confirm. If it does, I have a great entry and I am nicely profitable. If it doesn't, I stop out knowing exactly what my dollar risk is, knowing what the worst case scenario for the trade is. And again, that would be my stop loss level that I'm playing off of. That's an aggressive bull. A patient bull is waiting for proof on longer term timeframes and then using the lows for potential swing trade positions. And essentially saying that has to be the bottom or I will stop out. I will never bag hold in this sector. And the only reason I am not holding big red positions is I've been playing this game long enough where I've done that already. I did the penny stock OTC game where I held for a 700% gain and I gave it all back. And I will never do that again in my entire life. I learned from the mistake. So a lot of people in this sector are learning that same mistake. Doesn't matter what the fundamentals are. You can always go lower than you think. You have to have a stop loss so you can manage your risk. And then if you go back to all cash, there's the potential opportunity that you can buy lower. So again, I know a lot of people you are learning this lesson that are watching this video, and we have to. You have to go through that experience. I would be right there with you if I didn't already do this 8 years ago, 9 years ago, however many years ago, where I made that mistake. So if you plan on being in markets for the next 20, 30 years, use this as a catalyst. I made a huge mistake. I will never make that huge mistake again. It's very freeing when you don't bag hold. And the way to do it is putting a stop loss on every single trade. ACB, same deal. Trying for the daily high or low. Again, just imagine you're being a bear here. So we got the high of Tuesday. Well, if you short on the high, if you short Wednesday with the high of Tuesday as your stop loss, you make a big win. If you short Friday with your stop loss being over the high of Thursday, you have a big win. Bears keep getting rewarded for those plays. And we have to start seeing bears being punished for those plays to see the cycle shift. So how does a bear get punished? Break all these resistance levels. Break 315, break 321. We want to look back at the chart and put as many shorts underwater as possible, which means I can look at this and say, well, if we were to get over 456, I could then say that anybody that has gone short in ACB since February 17th is then underwater. And that's the kind of tilting of the scales between supply and demand that we have to see. So bulls must hold 220 and break 315 and 321 to confirm a daily trend change. Again, bigger picture, keeping in mind, that just means we zoom out and scout a weekly lower high, anything under 456. So that's it for Canadian MJ. I know there's other names, but everything looking very similar. VFF has been weaker recently. It's just trading sideways. So I would put it in the weaker category. And Cron is the lead bull because of earnings at this point. IIPR used to be the USMJ darling, but it is falling off with the broader market. We are in a monthly, weekly, daily downtrend, and we're doing the same thing as IWM. Trying to set the daily high or low, have to confirm a daily trend change, but even if we do, we just zoom out and scout a weekly lower high to be the result of the next bounce. I care less about IIPR. I care more about the MSOs personally. So MSOS. So it's in a daily uptrend. Granted, again, you're anti-FOMO. So you look at this and say, oh my God, I need a position. I'm missing out. This is the bottom. Then you pull up the weekly time frame and say, oh yeah, we can bounce 50% from here and still be in a weekly downtrend. So if ever I'm feeling FOMO, I just zoom out and realize how much work still has to be done for trend changes on longer term time frames. That being said, the daily trend change has confirmed. When's the last time we saw a clear daily higher low and higher high? This was really a double top here. So I'm really going to go back to all the way back in February as the last clear daily uptrend. So it's notable. The bounce is underway. We closed up at the high. We know that it is not the ETF doing buying, as they are pretty strapped for cash at this point, I believe. And it really is just correlations. It's just, you can see on the end of Friday, as soon as the broader market, this is what SPY did because of OPEX, and it kicked off at 315. So 45 minutes of bull move. And you can see MSOS is just doing the same thing. Here's 315, and here's this bull move. So we zoom out, and we know that anything under 2150 is just a weekly lower high on this bounce. We know we've been rejecting from this red line, which is weekly EMA 12 resistance for however many months. That's my key short-term level that I'm keeping an eye on. So my way of trading, I was not planning on trading MSOS at all this past week, and I bought a position into the end of the day. So what I did was I recognized a V-shaped bounce to break the high of the day. As soon as we break 14.05, I'm interested because that shows me a notable momentum shift. And I'm looking at the broader market all Friday and saying, wow, we are extremely weak. And then I turn around and say, MSOS breaking the high of the day, that's a bit unusual. So I grabbed an entry, and I was a bit late. So I grabbed an entry with a market buy at 1427. My day trading position sizes are smaller than my swing trading position sizes because if I'm swing trading, my levels are further away. My stop loss is going to be further away. If I'm day trading, my 5-minute high or low stop loss can be maybe 0.3% away. Whereas if I'm swing trading, my daily level that I'm playing off of is maybe 3% away. That's 10 times more risk. So my position size reflects that. So what I often do is day trade a position, sell enough to get it down to swing size position. And by selling some, I then drop my cost basis. So just a quick example of that, I entered Friday in the end of the day at 1427. And I know not to trust the bulls much in this sector over the last 6 months. So I sell fairly quickly. I sell half of my position at 1440. So what do I have now? A break even, math, 1427, 1414 is now my break even. So that gives me a cushion to work with. We can now pull back 3% on Monday before we get to my break even level. And I know there's a lot of space for an hourly higher low to form. Anything above 1348 is an hourly higher low. But what we need to see is multiple green days in a row to keep this move going. Because a daily trend change with no follow through, if the broader market sees fresh lower lows Monday or Tuesday, we're going to be looking at the potential of a weekly bear flag. Again, I want to look at things with my bull glasses on and say, okay, this is what I want to happen. This is what would be an ideal scenario. And then I put on my bear glasses and say, okay, even if I'm in a bull position, I want to know if I'm a bear, what do I want to see? What would give me red flags for my bull position? So if this daily trend change lacks follow through, it's going to be a weekly bear flag. And for me, I gauge flags. And again, we got all these videos on our YouTube channel. If you check out my fib retracement video, this is how I gauge whether something's a bull flag or a bear flag. So I measure from the last high where we topped out, how big is this bounce? And anything under, need to use my magnet, anything under 382 retracement means a bear flag is still on the table. So because we have been so weak, we can bounce over 10% from here and still be a possible weekly bear flag. So we have to keep that in mind. If the bulls are going to create space for a weekly trend change to try and set up, we need a 50% bounce retracement to create the space for the higher low to try and set that trend change. I go a lot more in depth into that in that fib video. Check it out on our YouTube channel. But I now have a position that I am fairly comfortably profitable in, and I'm going to give the bulls a chance. All right, show me something. If you're green Monday, I'll keep swinging this position. If we drop back down to my break even, maybe I just stop out, break even, back to all cash, and patiently wait for the next opportunity where I do something similar. So MSOS, nice daily higher low and higher high. Close at the high of the day. Have to be cautious because, again, I've seen these OPEX moves lack continuity where, okay, it's just OPEX into the end of the day, the next week rolls around, and there's no follow through. So again, I'm remaining skeptical of bulls. The bulls have to prove to me that I should be holding a position. And if they don't, I'm not making any excuses. Some bulls, maybe you, traders or investors, make excuses for the bulls. Well, I can keep holding because blah, blah, blah. New Jersey's coming online and maybe we'll recover. That's how you talk yourself into a bag holding position. For me, it's very simple. Concrete level. If this number breaks, I'm out. No ifs, ands, or buts. It's that simple. So obviously we need to know technical analysis and have a lot of experience and practice to determine what those important levels are. But that's how I approach things. Just a simple analytical approach to not let my emotions dictate things. Individual names, Curaleaf is standing out stronger. Daily trend change has confirmed. So higher, low, higher, high. Okay, great job, bulls. Zoom out. Anything under 763 is a weekly lower high. We can go over 10% this week and still be in a weekly downtrend. So we're making note of that, but the weekly bounce is underway. How much follow through can the bulls put together before we top out? Is the question that we have. We must maintain the daily uptrend. Next consolidation must hold 547 to keep higher lows going. There's other resistance levels in here, 655, 701, but 763 is the big one. So because the daily trend change is confirmed, Curaleaf is one of the stronger individual names. GTBIF, 1325 has to break. And so I know MSOS broke bull, but I'm keeping an eye on these individual names because I know if GTBIF does not break 1325, I know MSOS is not likely to go very far. We need help from all these individual components. And we can see here 1314, 1325, and we're approaching these resistance levels. We're not in a daily uptrend. We're coming off of a fresh low. So that means we need to top out on this move wherever we're going to and confirm a daily trend change. So Curaleaf is one step ahead because it's already done that. And then we'll zoom out and scout a weekly lower high with tons of space for it to form. TCNNF, It is a daily uptrend. It's a lackadaisical one. It's a lazy uptrend. There's no convincing bull volume. So it's a potential weekly bear flag unless we see follow through. Prove it to me, bulls. Give me a big green day. Give me a big volume day. So we technically have a trend change here with a higher low and higher high, but at the moment it's a daily uptrend with no follow through. Bulls must break 1539 and keep these higher lows and higher highs going. Keeping in mind, we're just going to look for a weekly lower high, anything under 2221. We're already a half hour long. We got a marathon video. Apologies. Can be more concise, but trying to go in depth for people that are not as familiar with technical analysis. CRLBF, just sideways. Again, bulls have not proven a thing. I need a break of 419, 420, double top. I need a break of 434 to see any kind of bounce. Then we zoom out and scout the weekly lower high. So Curaleaf, nope. CRLBF, Cresco, and GTBIF are not participating enough for me to have any confidence right now. They have to. TCNNF and Curaleaf are participating in this bounce a little bit more significantly. Verano is also a lead bear. It's the weakest name in the sector for me because of all-time lows. And again, I know fundamental people just saying, well, $12 is a deal. It just doesn't matter in a fear environment. There's nothing saying we can't go to $5 on VRNOF. So again, in the back of my mind, whenever I'm trading, especially downtrends, I always remind myself, we can see another leg down. We can go lower than I think. And that's my mantra for not bag holding. So on VRNOF, anything under 779 is just a daily lower high. And again, we're starting from scratch. We're coming off the low. So we have to see a top. We have to have a higher low and a higher high. Looks like earnings might be next week. Double check that date. Not sure if it is here. Sometimes we get false dates on TradingView, but a ton of work to be done. So I would put Verano as a weaker name with Cresco and Green Thumb. Still a lot of proving to be done. So that's USMJ. Now on to the psychedelic names. CMPS is coming off all-time lows, but it's the same little bull flag, higher low attempt that ACB and TLRY are trying to put together. And again, you zoom out and say, this bounce is meaningless. That's a 38% bounce. So it's going to be so easy to be up 100% from our lows with even just the slightest momentum shift. The problem is the bulls have been struggling for a very long time. When's the last time we saw a daily higher low and higher high? There was a bull break back here, but since then, 1531, lower high, lower high, lower high, and right now on this bounce, another lower high. So what the bulls must do is the same thing, have to hold 654 and break 899, we'll just call it $9, to confirm the daily trend change. Then we zoom out and scout a weekly lower high to be the result of that bounce. So one time frame at a time. ATAI doing the same thing. And again, massive bounce off the lows, 38% bounce. Little daily bull flag attempt. Bear break of 386 on Friday, saw zero follow through. Bulls must turn it around and break 422 to confirm the daily trend change. Then we zoom out and scout a weekly lower high with a lot of space for it to form still. And the last one, MNMD, same deal, but much weaker. Held the below, must break 85 cents, but it's not nearly the same setup that we just saw on those other two names. So MNMD bulls have more work to do. So keeping an eye on everything in this sector, not falling asleep, because we will see hundreds of percent gains off the lows again. It's just a question of when. So I will potentially be out of MSOS on Monday. I have no idea. I react to prices. I don't try and predict where we are going. So I'm going to be watching. Can the bulls convince me to stay in that position? If I do exit, I'll be back to all cash and back to patiently waiting, knowing that my dangling carrot is November. I do want a bullish position before November because I do believe there will be other people with my mindset, having played this sector, knowing the seasonality that occurs in this sector very often. So I am looking for that. I'm done talking. Appreciate you watching. Check out the YouTube channel. This is all over your head. And I look forward to future, more frequent videos in this sector when price action dictates bulls are proving something. Feel free to ask any questions. Have a good weekend.